Good morning, everyone. CPI today. Exciting stuff. Finishing setting up the live stream right now, getting access to the chat. So appreciate everyone getting here early. If you can, take us a quick second to like the stream. Super helpful in getting everything up and running nice and quickly. And we should be off and running here in a second. My screen capture is not working at the moment. Oh, there we go. Okay. Boom. Just waiting to get confirmation that we are in fact live, and we will be good to go. It's like we're live on 2 streams. That is good news. Chat is connecting. Connected 2 streams. Okay, cool. I think I'm almost there. There we go. Defend, good to see you, Mary Cox. Dave Nelson. Yeah, I had to start off a little early today because there's going to be someone interesting talking on CNBC in a minute. Chadwick, good to see you, brother. Hope you're doing well. Yeah, there's going to be someone who I like a lot talking on CNBC in a minute, and I wanted to make sure we got a chance to cover that prior to CPI coming in. Jeremy Siegel, he's a researcher who I believe always has a great pulse on the economy. He's one of the people who predicted we were going to be in not a bad place after those interest rate hikes, despite the fact that obviously they had a lot of effects on the economy. Good to see everyone. Adam, good to see you. David Baker. Yeah, that video last night was crazy. Guys, shout out to Taylor for that video. Taylor's the one who got me that video. And I actually had another video planned to drop. And I was like, you know what? This one's way better. Euro CPI was 1.8. Wow. Okay, so this could be pretty low.
Pennsylvania's Wharton School of Business, also the chief economist at Wisdom Tree. And Professor, thank you for being here this morning. We've been kind of talking through what the Fed might do next based on those FOMC minutes that we got yesterday. It does not look like there's a clear consensus at this point. It does not look like Chairman Powell will necessarily be able to drive things the way he may want. And I guess you're someone who has been in favor of more rate cuts. Why don't you lay out your case for it? Because the data that we've seen recently doesn't really play into that. If you're looking at the jobs market, even if you're looking at what Bank of America's Institute told us this morning about the consumer based on the 69 million accounts that they have for consumers and small businesses, things look better than you might have anticipated just a month or two ago.
Yeah, I think for everybody, including Fed, it looks better. But I still believe, and the Fed believes, that we are still way in restrictive territory. Remember, they said the long-term Fed funds rate they want to go to is 2.9. That's 2 percentage points below where we are today. Now, I actually think it's higher. I think it's probably 3.5, where we will eventually go to. When I just looked at the Fed funds markets, when I backed out risk premiums, it looks like about 4 more cuts to the middle of next year, which means maybe alternate 25 basis points and a pause. But let me say the following: for some people say, "Oh, we should stop now. Things are great." I think that's very dangerous. First of all, if you think that the Fed funds rate is at the right level now, which is right very near 5%, then that means that the 10-year is going to 6%. And mortgage rates 30-year fixed mortgages are going to go to 7.5%. And I don't think that the market is expecting that. So I think when you take a look at what the market is doing and saying is that, yeah, it's not as low as what the Fed says we're eventually going to go to, but it's still lower, much lower than we are today. Now we're going to get in a half an hour the CPI. I expect actually that the core rate might tick a tenth higher on the month over month than expected. I still think 1/10 for the overall, which would, by the way, bring the year over year overall all the way back almost to the pre-pandemic levels. So, I mean, we are almost there on the inflation. And the market is telling us, you know, we need to go further, 25, maybe pause 25. But by the middle of next year, I think we should have a 3 handle on the Fed funds rate.
You know, a couple of things. First of all, year over year, you're still looking at anticipated CPI, the consumer price inflation of 3.2%. So that's still something to be a little concerned about. There are questions as to what a lot of things that we've seen recently will mean for the inflationary picture. You can talk about the hurricanes that have just hit. And then you've got issues about what happens when the ports come back in January. We've put off the strike for now. We'll see what happens to it. Got questions about what to expect from oil demand. What's wrong with the Fed saying, you know, we're going to wait and see what happens over the next month or so?
Right. Well, the Fed should not react to supply shocks such as caused by the hurricane or caused by, you know, any hostilities in the Mideast that raise the price of oil by, you know, either keeping rates higher or raising rates.
Well, they got to react to inflation.
That would be doubly damaging, in my opinion, to the economy. Listen, we've had oil experts on that say that the oil prices have to be lower next year, that there's a lot of oil that could come online. I mean, we could talk about what potential if we take out Iran oil. Saudi Arabia has 2 million barrels, and it said, well, we could bring that online. But supply shocks such as the hurricane, the dock workers, you know, listen, you know, if you know, you can keep rates rising because groups oppose automation. I don't think that is the right place to be also. So, you know, when we take a look at the whole picture of where the Fed thinks the neutral rate is, and by the way, I look back to when they started looking at neutral rates, which is way back in 2012. And if we stop now, we would be at the highest neutral rate, far higher than anything that they had proposed over the last 12 years. And no economic model says that we should stop now and that the neutral rate is as high as it is. And as I said, if it is that way, then we all need to be prepared for much higher long-term interest rates. You know, I was the one that said that when the Fed was very aggressive, we would not see a drop in those long-term rates. We'd see a rise because the Fed has taken recession risk off the table. I mean, not 100%, but largely off the table. And a lot of people buy that long bond as a hedge against recession. If the economy's going to be strong, long-term interest rates are going to be strong. They're going to go up. You know, everyone's that's waiting for the rates to go down. They're going to be very disappointed.
Professor Siegel, thank you.
All right, coming up at 8:30 Eastern Time, CPI. Yeah, inflation data. But next, Virginia Governor Glenn Youngkin joins us on the hurricane recovery process. Squawk Box will be right back.
All right, so one of the things people were talking about is what is trueflation, and believe it or not, trueflation's actually had a bit of a spike. I haven't seen this. So trueflation went all the way down to about 1.4, 1.5, and now is rebounding back to 2. I don't think it's much of a significant rebound. In fact, sitting at 2 is actually better than inflation continuing to drop off a cliff. I thought it would keep going down because of that reacceleration, but it seems like it has bottomed pretty nicely here. If we could just kind of hang out at that current rate, it'd be a really good place for inflation to sit. Deef, I appreciate you bringing that up. If we switch over and take a look at the historical inflation, we can see that inflation has dropped right back within the 100-year average. This is one of the things I like to continue to talk about here because it's so important. Firedog, thank you so much for the donation. I really appreciate that, brother. My morning coffee. Appreciate that a lot. Thank you, brother. Need to go back to 25. Yeah. I mean, here's the problem. Like, as Jeremy Siegel was just saying there, the neutral rate is about 3%, and we don't want to be too far above that neutral rate. So as I see it, it definitely makes sense to cut at least to the point where we're at the neutral rate, considering where the economy is right now. So as you can see, inflation has already really dropped within this 100-year average. I think the projection right now is that this comes in at about 2.3. I think the projection right now is this comes in about 2.3. Anything lower than 2.3 would obviously be very good. We want to just get as close to 2% as possible. Brian, good to see you. Silver Days. Good to see you, Silver Days. Hope you're doing well. Yeah, guys, make sure to smash the like button. We want to get as many people in here before CPI drops. I started this thing a little early just so we could get a good crowd going prior to those CPI numbers coming in at 8:30. Like we always say, we know the CPI numbers are manipulated, but it's a manipulated game. And if we're going to be playing the manipulated game, we got to make sure we understand the rules and adjust accordingly. So I'm not necessarily a believer that these numbers are legit or it's what people are feeling. But it's important to understand that it doesn't mean these numbers aren't massively important for the economy. Dropping within 100-year averages isn't good enough. Well, what do you expect CPI to be then? If we're not within the 100-year average of what, like, look at this. We're actually at the lower end now. Like, we don't want deflation.
Coming into Florida just off Sarasota last night, but storm surge is still a major concern. More than 3 million homes and businesses are without power, and the National Weather Service is still warning of flash flooding. Our next guest sent reinforcements to Florida. His own state was hit by Helene about 2 weeks ago. Let's welcome on set Virginia Governor Glenn Youngkin. Governor, thanks for joining us.
Thank you.
Thanks for squawking. You got the squawk dress code, and we appreciate that.
Thank you.
Okay.
Thank you.
When North Carolina, in the center of the state, became ground zero, it was very surprising to a lot of people for Helene, which shows you can't assume anything about weather, these storms, the hurricane. What about Virginia?
Yeah, you can't assume anything. And at the start of a storm tracking, which governors start doing early on because we're the front line of both protecting our citizens and then responding, we in Virginia deployed an extraordinary amount of resources for life-saving activity and for restoration. And so our swiftwater rescue teams and our emergency operation teams were all deployed early. And you see the way Governor DeSantis has handled this most recent Hurricane Milton. And let's just begin with the real expression of real sorrow and support for what's happened with Hurricane Milton on the back of Helene to Floridians. And it is our experience in Virginia, which is first we have to get the teams on the ground, and then we've got to get power back on and communications back up and water systems back on, all of which we've done very rapidly, that enabled us to send our search and rescue teams and emergency response teams down to Florida to support Governor DeSantis and Floridians. And we've got 235 of our Virginia National Guardsmen. We've got our helicopter aquatic rescue team personnel on the ground there right now. We've got folks in motion to support their needs. And that's what states do, by the way. There's a whole system called EMAC where states ask for help and we respond. We've got personnel in North Carolina now, search and rescue and emergency management supporting North Carolina. This is what states do to help one another. By the way, this is what Americans do. And I think one of my big takeaways from this last 2 weeks is, first of all, the heroism of our first responders. We had 70 water rescues in Virginia that saved lives. We had 2 tragic fatalities, but 70 rescues. And what our first responders do is extraordinary. And then to watch Virginians helping Virginians and Americans helping Americans is inspirational at a time when I think people look for the dark side of all of this, which is real. Lives lost, possessions lost, futures really, really damaged. But there's hope at the end of this, and we watch it happening as nonprofits and our local folks and our state folks and, of course, national resources really do move in order to support recovery.
So, Milton, this event basically is passed for Virginia?
Yeah, it appears, and I even took a brief early this morning yet again. Milton is fully expected to blow out into the Atlantic. And thank God, because it was devastating in Florida. I mean, over 3 million people without electricity this morning. And we were praying that it is light on Florida and blows out to sea.
We may talk a little bit about the election coming up. The way I'd frame it is you had a career in the private sector, and I think you have a pretty good feel, even in Virginia, for what works to try to grow the economy. Yeah. Can you, in your view, summarize what this election looks like?
Well, at the end of the day, the top issue by far, I mean, by a huge margin, is the economy. And the reality for Americans and Virginians is the last 3.5 years has been rough. There's been unprecedented inflation like we haven't seen in 40 years. And that has translated into real challenges where Virginians and Americans are living paycheck to paycheck. Listen, over the last year, over 500,000 Americans have had to take on a second job in order to make ends meet. We still have not seen a return to the labor participation figures that we saw pre-pandemic, and we actually saw unemployment increase. And so at the end of the day, this is about jobs, this is about economic confidence, and this is about Americans feeling like their government, and particularly their federal government, is going to deliver for them. One of the real observations that folks have to have is we have seen about 10 states driving the entire U.S. economy. We have winning states and losing states. And the reality is we need the whole country to be driving forward, not just 10 states driving the entire U.S. economy and job growth. And that translates into the need for manufacturing to be returned into job growth. That translates back into Americans feeling like they can earn a living and pay for the basics, groceries and gas and their electric bill and rent and a mortgage. And to date, Americans are saying very clearly that what they've experienced during the Biden-Harris administration is the exact opposite. And that's why the economy is the #1 issue on the ballot.
Over the last year, the Biden administration would say we finally started seeing real wages grow, stock markets hitting highs, GDP, we probably recovered fast. I mean, the United States should recover faster. We always have from the pandemic, from the financial crisis or whatever. But you'd hear they're selling hard now on that Bidenomics worked. And that, unemployment's good. We're going to have a soft landing. The Fed orchestrated, brought inflation down. I mean, they have things that they think they can sell at this point.
Well, first of all, we can't tell Americans to ignore what they've seen and felt. And that's what the Biden-Harris administration has been trying to do. Don't acknowledge the fact that you're living paycheck to paycheck because it's really better than you think. And listen, for the hardworking Americans, they have not seen real wage increases. And during the Trump administration, they saw 15% wage increases. And hardworking Americans understand that clearly. And as a result, no matter what they try to tell people they should feel, the reality is their wallets are stretched, they're struggling to make ends meet, and that is the reality for voters in Virginia and America.
Hey, yeah, we can jump in some of the Noty stuff because that's definitely interesting. Daz, let me know because I do listen back to streams. I've never noticed anything wrong with the audio, but obviously, if you're noticing something, let me know. I'm confused about where the audio issue is coming in, but if you do let me know, I'll do what I can to fix that. Yeah, so guys, I'll show you the funny Noty thing. So I did hit back at him, just so you guys know. I always have to hit back a lot. I will say, I thought Noty's video was really funny. I did enjoy Noty's video. I think he's completely wrong, but I did enjoy his video. So the whole thing with Noty was saying that I was completely wrong in terms of XRP possibly being able to be moved over the Swift network. So I don't understand how he would know whether I'd be right or wrong, because neither of us know. The announcement was that Swift is going to allow cryptocurrencies to move over the Swift network. So all I was saying was if Swift is allowing cryptocurrencies to move over the Swift network, I mean, what's the chance of one of those cryptocurrencies obviously being XRP, right? Like, interesting. Yeah, it doesn't seem like anyone else is having audio issues. Cool. My whole point was, like, if cryptocurrencies, let's just go over the whole thing because it'll be funny. Let's just go over the whole thing. So the post started with and we'll just go right to Noty's video because I thought the intro was hilarious. And guys, you need to understand, like, stuff like this doesn't bother me at all.
Build another 3-row SUV. We carefully crafted every one of
Remember that job growth that has been claimed by the Biden administration, a lot of that is bounced back.
All right, so this is the start of Noty's video.
Mickle ratioed me on Twitter. I said, rip XRP. Just keeps getting more grim. And for your XRP people who don't like these videos, guys, I'm telling you the absolute truth. There's no debate. And for my own subscribers and people who like the truth, look in the comments. No one will logically debate me. There'll be no logic. It'll just be emotional stuff like, you don't know what you're talking about, all this stuff. No. People said, Noty, I don't want to see opinions. I want to see facts. I'm about to break down the ultimate facts in this video. So Mickle ratioed me badly. I'm down bad, okay? And then he goes on to post this video.
All right.
Okay.
So let's talk about why I ratioed me
badly.
I do think it's funny the way he said that for some reason. I thought that was hilarious. And guys, let me just say, the way Noty made this video, I thought it was perfectly fine. I thought it was perfectly fine. Like, he was funny about it. He gave his opinion. It wasn't over the top. I actually messaged him afterwards. I was like, dude, like, nice video. Like, good for you. You kept it respectable. We can have disagreements on how this works, but okay, so there's a post from Swift. It said, exciting, starting next year, financial institutions from around the world will start trialing live digital assets and cryptocurrency transactions on the Swift network. So, moving digital assets on the Swift network. And he said, rip XRP. And I said, what cryptocurrency is Swift using? Because they specifically said digital asset transactions, so moving digital assets. Noty made an entire video talking about how Chainlink would be incorporated into that system. And there's no doubt about Chainlink is working with Swift to build a system to allow data reporting and all kinds of liquidity needs on the Swift network. But specifically what Swift is talking about in this post is moving cryptocurrencies on the Swift network. So I said, what cryptocurrency is Swift going to be using on the Swift network? Because obviously they have to pick a cryptocurrency that exists, and XRP is one that obviously has close ties to the Swift network based on everything we've seen. So I thought this was pretty funny because he said it was Chainlink the entire time, not XRP. And he kind of just was making the point in his video, like, how could you ever think it was XRP? But it's videos like this that I'm about to show you that are just kind of like flying the face of everything he was saying. He's saying, oh, there's no way it could be XRP. There's no way XRP can be the cryptocurrency used in the Swift network. But listen up to this.
There's a discussion surrounding crypto replacing Swift. So we did speak earlier where you mentioned that it's not necessarily about replacing Swift, it's about complementing it. So let's get some more information on this.
Okay. I used to work for Swift. I was Swift for 20 years, so Swift is flowing through my veins. Swift is the preeminent messaging system for the financial industry, which covers, say, payments, FX, trade, in terms of securities, etc., Nostra reconciliations, etc. What we're looking with the crypto, though, is where Swift would have a store and forward system for most of its payment transactions, where you need service level agreements that in a certain time I will do something if a payment turns up at a certain time during the day. Here we're looking at the new network styles, which allow instant, real-time movement of the funds and visibility of those funds as well. So we would not have a situation where banks need to come back to you and say, have my funds arrived? It's 3 days later. I need to find out or find query messages moving around the network. There's nothing like that. I don't believe Ripple is going to replace SWIFT. Ripple is one of the complementary networks, which is going to allow those institutions who need real time to make use of that. And I think we're also seeing that SWIFT are changing their network capability so that real time will be a possibility as well. But we may also see Ripple XRP moving across the SWIFT network as a currency when we're perhaps using something like FX.
Now,
so,
I just slightly moving on for a second.
Yeah.
So, I mean, right there, we have someone who claims they have SWIFT running through their blood, specifically talking about using Ripple and XRP on the SWIFT network. So, like, here's the thing. Like, Noty can go out and say anything he wants and talk about whatever cryptocurrency he wants being used on the SWIFT network. But it's obvious that Brad Garlinghouse has been on stage with SWIFT members since, like, 2016. We have SWIFT members talking about specifically Ripple and XRP. We have Ripple next to documentation with SWIFT since the entire time I've been following this saga. So could plans change? Absolutely. There's no doubt about it. But I think it's fairly obvious that if in terms of any cryptocurrency being closely tied to the SWIFT network, XRP is one of them. And it's not to say that Chainlink isn't also. Chainlink obviously has had some sort of relationship with SWIFT for a while. But is it going to be the Chainlink token moving value back and forth on the SWIFT network? Are they going to be using Chainlink to actually facilitate cross-border payments? I highly doubt it. It's not really the use case for what Chainlink has been building out. So I think it's very possible both are going to be a critical part in what SWIFT is building. And the point I was making is if SWIFT is allowing cryptocurrencies on the network, to me, it seems fairly obvious to think that XRP will likely be a cryptocurrency that's a front runner to be used in this new system. So I hope that makes sense. I'm not upset about Noty's video. I thought it was a really funny video. I loved the intro. I thought it was funny that he at least gave me credit for ratioing him pretty bad. But, you know, I don't think you have to look too hard. I don't think you have to look too hard to realize that XRP, obviously, with Ripple's help, has been integrated very closely to SWIFT. And to think it's going to be XLM and not XRP, I mean, that's even more delusional. That's even more delusional. I mean, his video, I don't think mentioned XLM. I know he mentioned at some point some part of XLM was more about Chainlink. And I'm a big fan of Chainlink, and I think it was a great educational video on Chainlink. But in terms of using a cryptocurrency to move funds from point A to point B, I mean, you listen to someone from SWIFT themselves say it there. It specifically, he said that XRP could be moving on the SWIFT networks for things like FX. Oh, no problem. Yeah, no. Look, man, and like I said, I think Noty was very respectful in his video. I didn't have any problem with his video at all. Messi, appreciate that. We're about to flip over, and we can watch Noty's whole video after. We can watch Noty's whole video. Talking about Chainlink. I've got CNBC right here, Messi. So as soon as that's ready, we'll flip over. Yeah, guys, this whole idea that one cryptocurrency is going to win. Do you already have the numbers there, Defen? Yeah, those numbers, if those are the numbers, those are hot. Hold on.
Box Rick Santelli here live at CME HQ with the breaking news of the morning. Big news. CPI, the big inflation number for September, hitting the wires. Expected to see a headline up 0.1%, comes in up 0.2%. If you strip out food and energy, up 0.3%, which of course equals our last look. To find a bigger number, you have to go back to March when it was up 0.4. But do keep in mind, June was up 0.1, July was up 0.2. So this has been running a bit on the warm side. Now, if we look at year-over-year numbers, 2.4, hotter than expected. but 1/10 cooler than the rear view mirror, and it continues the streak of these numbers year over year on the non-core moving lower. And if you look at 2.4, just like 2.5, it comps back to February of 2021. Now, if we look at what's going on with respect to year over year core, which starts to get into some very important numbers here, this one's warm as well. 3.3. 1/10 warmer than expected, 1/10 warmer than the rear view mirror. It equals June, but of course the last 2 months have been 3.2. Now, finally, if we look at the indexes, and I think the indexes are very important, the index for the headline number, 315.301, another all-time high. If you look at the core, 320.76, another all-time high. Now, let's look at initial jobless claims. Some surprises here. 258,000. 258,000. That's going to put a little potential downward pressure on interest rates. The last time we had a number in that category, you're looking at June of 23, where it was 261,000. And finally, yes, it's the 18th consecutive month over 1.8 million on continuing claims. And just for the record, the last time we were above 1.9 million was November of 21. We come in today at 1,861,000. That would be the warmest going back to the third week in July. So to summarize, it certainly seems as though the inflation numbers pretty much across the board were either as expected on one count, but pretty much warmer on all counts. And initial jobless claims definitely had a little pop there. So before the number, we were hovering right around 404 in a 2-year. We have dropped rather dramatically. We're now briefly under 4%. But if you look at the longer dated side, it moved from about 408 to basically 406. So it moved down as well. What's notable about 10-year is that yesterday was the 6th consecutive session that the high yield was higher than the previous day's high yield, all consecutive. So we want to monitor today, and today it already happened. We have traded above yesterday's high yield. We have high yield today of 410. The high yield yesterday was a whisker under 408. That means 7 in a row. Why do I bring this up every day? If you're a technician, that's a real momentum builder to higher yields, lower prices. Becky, back to you.
And Rick, what about that auction sale you were pointing out yesterday? You made the interesting point that we'd see if traders are more concerned about locking in some of the gains maybe they've seen at this point, or maybe more concerned about that upward trend continuing.
Yes, I think what we are going to see is, and we do have an auction today, reopened 30s, 22 billion. But I think we learned a lot over the last couple of auctions. It certainly seems as though certain categories have gotten a bit excited. Yesterday, it was all about indirect bidders. For the 3-year, it was about direct bidders. These categories show me that there is a little bit of nervousness out there regarding the U.S. economy, how the Fed has anticipated how the rate cycle will go. And yes, I think there has been some profit taking, but I do think there's more of a reluctance to fade the notion that long duration rates like 10s, 20s, 30s, even 7s to some extent are going to be a bit more excited. Many believe it's the political season, and that subset believes it's all about debt and deficits, and how neither candidate seems too worried about trying to overspend to get more votes. Back to you.
All right, Rick, thank you. Steve Leisman joins us right now with more on this. And Steve, I guess my question would be, is the Fed more focused on a hotter than expected inflation read or a higher than expected jobless claims number?
I think the answer is yes, Becky. I think they're going to follow all of this right now. And this is a disappointing report, but not incredibly disappointing. And I'll go through some of the numbers here that I think created the pop here. This pop in food prices up 0.4%. A pop in used cars were -1 in the prior, minus a full percentage point in the prior month. Now they're up 0.3. Apparel up a strong 1.1%. Shelter, though, helping out here. Hang on, I wrote down the OER, owner's equivalent rent. Went from 0.5 to 0.3. That is one of the lower numbers that we've had, and might show that finally we're getting, that's the lowest number I have, at least in front of me here, going back to the last several months. And then you also had motor vehicle insurance up 1.2 and airline fares up 3.2. I think, Becky, what we learned yesterday from the minutes is that there was a robust debate about doing 25 or doing 50. We heard yesterday Lori Logan, the Dallas Fed president, talk about still existing concerns about inflation being out there. We don't know how many Fed officials have this concern about it, but it may be as many as 6 or 7. It may be that Fed Chair Powell was out there twisting arms to get 50. There was certainly a number who wanted to do 25. And this down the road says, okay, maybe there's fewer cuts to come, especially if we're going to run sort of these high inflation rates. The good news, you had a decline in energy prices down 1.9%. You also had, finally, it looks like, some decline in housing inflation out there. The bad news is there's still some inflation out there worth watching. And then you also have to watch, as you said, the jobless claim. So the Fed sees it as balanced. I think there's still more cuts to come because of the idea that the Fed thinks you want to reduce rates to be in line with the prior decline and the strong decline in inflation while still maintaining a restrictive standpoint. So this has an impact, I think, down the road with how far the Fed goes.
Okay. Steve, thank you.
Coming up when we return, a unique view on the AI race.
Okay, so some interesting things there. The inflation came in slightly hotter than expected. On the other side of that, the jobless claims also came in hot. So it kind of leaves us in a position where the Federal Reserve is like, hey, like we want to start cutting because jobs are becoming an issue. We're starting to see some impacts on the economy, but inflation's ticking up. I would say the inflation ticking up is something I'd be less worried about at the moment. If we take a look at what's going on in the long-term chart for inflation, we can see that we actually got a number of 2.4, which isn't great progress, but it's progress downward. We're still continuing to move lower here. So we got a tick down on inflation. Now we're sitting at 2.4. But something I'll continue to reiterate on this channel is like, take a look at history. Like, it's not like we should expect inflation to really go anywhere and just sit there. Like, the point is like, if you look at history, we're out of the scary zone. Like, the scary zone for inflation, and when we talk about hyperinflation, like, that's at these peaks. Like, that's not happening anymore. And I think that's the most important thing of what we're watching. Like, the Federal Reserve is going to have to like do a lot of finagling to keep inflation back in this 2% range. But the important thing to note is we're not in a hyperinflationary environment, or at least it doesn't seem like there's really any fears around that. We got a slight miss today. With that said, though, the Federal Reserve might be more focused on the job data, and that's why I think you saw rates coming down regardless. And yep, the 2.4 number just printed. So this is up-to-date data. And we can see that inflation is still coming down pretty nicely, and we don't have a lot of work to do to get to 2%. I'll draw a line at 2% here. That's the Fed's target, and as you can see, we're pretty close to that. So I don't know. I'm not overly worried about these numbers. They were decreasing year over year, which is good. Lift the 99%. So do I trust the data? Asking because they always switch job data on the back end months later. They don't really switch the inflation data that much. They do switch the jobs data a lot. It doesn't really matter whether I trust it or not. And let me tell you why. It's because whether I trust it, whether you trust it, it doesn't really matter, because this is the Federal Reserve's way of judging policy. So the Federal Reserve takes these numbers right here. The Federal Reserve takes these numbers right here and says, okay, based on these numbers, what should interest rates be, right? So if we take a look at interest rates, interest Fed's fund, say interest rate. So if we take a look at interest rates, right? Like interest rates right now we're at 5%, and you can see an old projection I had here that this is about what we're going to start doing, and it looks like that's already happening. But the point I want to make here is it doesn't really matter whether or not I believe the numbers, because the Federal Reserve is going to be changing this number based off those other numbers. And this is the most important thing. And the Federal Reserve's policy, to me, is indicating that this number is going to drop pretty substantially. I understand, but I'm arguing that hyperinflation is more possible what people think solely based on the chart you were looking at. Hyperinflation is possible, certainly. And I think you could argue that we see hyperinflation all over the world, and we already see pretty substantial aggregate inflation in the United States. But I mean, let's be honest, like, what are gas prices right now? $3, $3 to $4 if you're not living in California. Like, that's expensive, don't get me wrong, but I mean, it's not insane, right? It's not insane. I remember when I first started driving in I don't even want to give this number out. It's going to be shocking to a lot of you, but I remember when I first started driving, that's about where gas prices were. That was even pre-Trump. So it's important to realize, like, there obviously is inflation, but it's not hyperinflation. It's not like gas is like $30 a gallon. There's a difference there. Well, hyperinflation is not going to happen in hours. I'll tell you that. It's not going to happen in hours. Hyperinflation is going to take weeks to months minimum. Oh, yeah, I mean, here's my point, guys. Here's my point, and I want to make this clear because this is the thing everyone's saying. Everyone's saying that this CPI data is manipulated to make the numbers look good. I completely agree. Of course it is. They control the freaking index. They pretty much control these numbers. So, California gas has gold in it. Chadwick, that's an awesome comment. So guys, why do I not care that these numbers I'm looking at right here are manipulated, right? These numbers right here, these CPI numbers, I'm admitting they're manipulated. So why do I take them seriously? Because the Federal Reserve is using these numbers to dictate the interest rate. And the interest rate dictates how much money there is in the economy. So if the Federal Reserve is manipulating these numbers, right? If they're manipulating the inflation numbers, which they very well are, then that means they are going to be reacting based off those manipulated numbers on the interest rate. And that means they are just doing whatever you need to see in order to change the macro environment. So it just depends on one thing at the end of the day. Do you want to fight the Fed or do you want to invest with the Fed? Do you want to fight with the Fed? Do you want to fight with the Fed or do you want to go against the Fed? It comes down to those two things. If you think that the Federal Reserve does not control the markets, that's perfectly fine. But I would say almost everything in the market would disagree with that. This is a great. Jason says Mickle is paid by Uphold, a Ripple-owned company. His job is to exaggerate the potential of XRP. Uphold pays me the same commission that you guys can get. So you guys can all go get paid by Uphold too. You get a referral link, and then if people click on the referral link, they give you some money. But Uphold does not pay me to make videos. I like Uphold because they kept XRP listed throughout the case. So out of all the exchanges that reach out to me, I figured I'd throw Uphold a bone. Uphold is also not a Ripple-owned company, so you also got that wrong. And I probably do. I don't purposely exaggerate the potential of XRP, but I'm extremely optimistic on the potential of XRP. So I think there's a difference there. I'm not exaggerating anything. I think most of what I say is pretty open. Yeah, you guys can all go get paid up by Uphold too, and you can pretty much get paid by anything. You can get paid by anything. If you go to your Robinhood account right now or your Charles Schwab account, everyone has referral bonuses. It's just a referral bonus. Yeah. Anyone can go get it. So I don't think that's anything disingenuous. I think I've been pretty honest about that. Yeah, definitely not Ripple owned. Yeah, Uphold's great. I love Uphold. It's like one of the only exchanges I go on and I don't have like a brain aneurysm looking at their UI. Everyone's like, oh, Uphold has high fees. And it's like, yeah, Uphold's fees are a little more expensive, but I mean, I'll pay a little more expensive fees if it comes down to me using a platform and not wanting to like die from the platform being so bad. Oh, don't you worry about me. I appreciate that, guys. But I at a certain point, it's nice to have some fun a little bit. Do a little. Noty got me in the mood for a little clapback action. Noty got me in the mood for a little clapback action. So that is an interesting comment. That is an interesting comment. There are a lot of people saying what we're seeing is very similar to 2008, 2007. I understand why people would be fearful that we are in a 2008, 2007 scenario here. I totally understand why people would think that. You can look at a lot of the data and see a lot of similarities. I want to remind people, though, of one simple thing. 2008 happened because of something being broken and wrong in the economy. Something was broken and wrong in the economy. So we don't have anything broken yet. It was an underlying broken piece of how the financial system was working. We don't have that. So we need to understand that it's very likely that outside of something breaking, it's going to be hard to recreate a 2008 event. Could something break? Absolutely. But it's important to realize that something is going to have to seriously go wrong in order to get to 2008. It can't just be jobless claims going up. It can't just be interest rates going up. It has to be something a lot more serious than that. And could something more serious happen? Absolutely. I'm not saying that can't happen. I'm just letting people know it's not just going to be interest rates going up and down that's going to cause a 2008. It's a better comparison for that is a 2018. So if people are curious about this, we were in not the same thing, because it's never the same. I always think it's so funny when people say, you can never say this time is different. Have you guys ever heard that? Like, people are like, oh, you can't say this time's different. It's like, all right, it's always different. Like, has it ever been the same? Can you show me any 2 points in history that were exactly the same? Of course not. That's crazy, right? There's never been 2 points in history that have ever been the same. It's always different. So I always think that saying's so funny. Like, oh, you can't say this time is different. It's like, all right, well, what are you going to say? It's the same? What 2 points in history are the same? I mean, I have a routine that I go through every single day. It's never the same. Nothing's ever the same. No matter how much I try to make it the same, it's never the same. This is 2018. We had this big kind of V bottom. It was the taper tantrum days. This is what I think would be a better comparison to where we are now based off interest rates. If you compare that to something like a 2008 was like a dramatic fall off. So if we can take a little bit of a measure here, if I can ever find my measure tool. Yeah, if we take a look at, oh God, I am breaking things left and right here. Hold up. All right, so if we take a measured move, this is annoying. If we take a measured move from 08, we can see that we were down like about 54 to 60% on the indexes. If we take a look at 2018, we can see that we are down about 20% on the indexes. So I think it's a lot more likely that we repeat something like a 2018, where there's a lot of fear in the market, but it's not necessarily something that's catastrophically broken. It's important to realize where we're coming off of, too. We are making new all-time highs, so the market's optimistic. It's very likely we do get a pullback at some point. I just don't want people to think that just because we have a pullback, it doesn't necessarily mean that things have to be destroyed and we have to be left with a broken system. If something does break, it breaks, and we have to deal with that, but I don't want it to be people's base case. But I do think it's funny, like, people always come back to that saying. It's like, you could, like, when you want to say this time is different, like this market event is different, it's like, it's always different. I push back so hard on that. I'm always so surprised that's such a big thing. Also, guys, we have 1,684 people watching this live stream right now. Absolutely incredible. I appreciate all you guys so much. Doing these live streams and just getting to talk about market data is one of my favorite parts of every single day. Getting to hear your guys' opinions on all of it makes it so much better. So if you do enjoy being here, make sure to smash the like button. Make sure to subscribe. If you're new here and you're not subscribed, just hit the subscribe button. It will make it so these live streams show up in your subscriber feed. And that way, if you do want to join, you at least see them. And you don't have to go searching all around YouTube for that. So really appreciate everyone taking a second. Hit that subscribe button. Hit that like button. Helps out a ton. And you guys are the best. Yeah, I don't know where Jason went. Apparently, Jason wasn't ready for the heat he was about to get for that comment. So that's always how it is. I never want to be like aggressive with anyone, right? Like people can accuse me of whatever they want, but you're going to get hit with facts on the other side of it. Mickle, can you do a deep dive on XLR Coin? I'm down to do a deep dive on XLR Coin. I just need a little more there. It's hard for me to really understand exactly how XLR is going to work in this entire system. And to be honest with you guys, like I'm not really necessarily like a deep dive kind of guy. Normally I like to wait for things to materialize a little bit. I like to see things in action, and then I like to report on kind of the impact and things that are a little more present. So I'm extremely excited about XLR, but it's still a little bit early for me to get overly excited about it. It looks like there is some very interesting things going to be happening here behind the scenes. Kenneth, thanks for coming over and becoming a subscriber. Daniel as well. Thank you guys. But I will definitely be making a lot of videos on XLR in the near future. I think they're going to be a big part of what Ripple's doing. And very excited about that. It's just that in terms of the deep dive part of what XLR is doing, I'm sure someone else can make a much better deep dive video than me. I just don't really like to jump the gun, right? Like when XLR really gets cooking with Ripple, we'll be able to see what they're up to. But a certain portion of me is like, what's the point of me going out and guessing, right? Like I've seen so many videos of people breaking down like what they think is going to happen with a certain thing, and then it just turns into more of their opinion than anything factual. I am currently, full disclosure, I am currently purchasing very small amounts of the XLR token. The reason for that is because I do see this general bottom here. To me, this looks like this could possibly hold. It might not either, guys. This thing could break through, right? This could just keep going downward, and then I'll be forced to keep buying down at the bottom. But it's a calculation that I'm worth making. The calculation I'm worth making. Like your style, Mickle. Brian, thank you. Thank you. Daniel took out the trash, aka Jason. I appreciate that, Daniel. I like to need the DXY to drop. Yeah, we'll take a look at the DXY, Daniel. I saw you comment on that earlier. Love to have you here, Daniel, by the way. Always a pleasure to get to speak with you. Dollar currency index. Yeah. So Daniel, I'm not overly worried about this yet. I'm really not. Let's get some candles in here. We're actually getting a red candle today. That shows you that the market is actually more interested in those jobless claims in the inflation data. So my guess is this probably looks a bit more like a dead cat bounce. Ingrata, welcome. Appreciate you becoming a subscriber, man. Welcome. I'm looking for the dollar to come down here. We'll see what the rates cuts decide to do. But Daniel, really all of this move has been since the last rate cut. And it might just be noise on the chart. We don't know how significant any of this move is. We'll get a much better look at what this move actually means once we get that next Fed decision. But this thing really needs to start showing some strength before I'm worried about it. There's been many times before in other big drops on the dollar where it's done that. It's looked like it was coming back. Like, take a look at this one here. This is from 2017 to 2018. You have that spike up, back down, spike up, back down, spike up, back down, spike up, back down. So it's not abnormal to see the dollar doing this. It's not abnormal to kind of see money flow into the dollar and then beg back out in a big way. So we'll keep our eye on this, but I can't say it's anything right now that I'm looking at. Like I'm thinking like, oh, this is a big issue. Dude, I'm debating pulling up the Noty video, but we'll leave that be for now. We'll leave that be for now. There's enough other interesting things happening in the market that I'd rather cover. Boom, XRP is pumping. Is XRP pumping? Huge candle. Why isn't my XRP chart pumping? What is up with that? My trading view. Oh, it is pumping. Trading view can do me so dirty right now. Okay, so we got an XRP little move here. Okay. Looks like I have this shifted wrong. I wonder what's causing this. I wonder what's causing this. Could it maybe the XLR SUI news? Let's get a little more granular in here. It looks like we got a pretty big candle coming in. We'll drop this down to the hourly. This is what we've been waiting for. Okay, that's a nice looking candle. All right, we'll have this going. We'll have this going. Or should we get some fiat leak going? Let's get some fiat leak going. That's a little more exciting, I think. Let's pull that up. All right, here we go. Nice. Not going to say unexpected, but a little bit out of nowhere. Huh? Let's see what we can get going here in terms of momentum. XRPD is going off. Yeah, I don't know if Bitcoin's doing anything, right? Is Bitcoin going up or down?
Frank.
The Social Security Administration announcing a 2.5% cost of living adjustment for 2025. With that change,
let's see. Yeah, Bitcoin's not really doing much, if not going down. Let's see if this is going to be sustainable for XRP here, or this is more of just a random pump. It's good on the charts, though. It's a good reaction on the charts either way, regardless of where we get to here.
Cartoon monkeys. I believe.
Oh, so that's Twitter Spaces today. I got to make sure I have a reminder on that. Oh, hey, here we go. We're almost up to 54. 54 cents on Coinbase. Oh boy. What's happening here? Is there something happening we don't know about? This is a little out of the blue. This is how XRP moves, guys. And this is one of the things I always try to hammer home on people. It's like, look, you can get upset about like how XRP doesn't react to news, but it will make the move either way. It's just going to when people least expect. 12 p.m. space is awesome. Yeah, I got that one marked down. That's going to be an interesting one. I'm excited to see how XRP kind of gets incorporated into a network like SUI. SUI's got a lot of momentum right now. Yeah, I love the boom that Fiat Leak puts out. Is price behind on TradingView? Fiat Leak, it just depends where you're pulling the data from. Hey, Mickle, I have a quick question. We are all looking for XRP, but there's something behind the bank. Please tell Cobb to stay off the live stream. That's funny. Big Lou, hey Mickle, I have a quick question. We are all looking for XRP, but there's something behind the bank and XRP that we need to know. What other coins or cryptocurrencies that banks will consider to earn profits through yield and invest? Big Lou, if you don't mind, can you just rephrase that? It's not what you said is wrong or not clear or anything. It's just that there's a lot to that question, and I just want to have a better idea of exactly what you're hitting on. I'll make sure to keep an eye on the chat and get you answered. Like, are you asking what banks will do with XRP or what other activities? I need a little clarification there. Erie popped. Yeah, I love when Eddie stops by in these streams, man. She's an OG. I learned a lot of what I know from her. And I know a lot of people think that she's like negative on stuff. Guys, she's not negative. Sometimes she's just realistic. Like sometimes people don't want to hear the truth, and she just drops the truth of the situation. And some people take that as her being negative. Well, so sometimes I'll think maybe that's a little overly negative on some stuff, but for the most of the time, she's right. She's probably right more than anyone else out there. She's probably right more than me when it comes to a lot of stuff, and she definitely knows more than me. So, tons of respect to her. I love that story. That's a great story. The Texas Roadhouse. That's funny. The stream is behind. Yeah, my stream is going to lag a little bit for you guys. So my stream is always going to be a tiny bit behind what's actually happening in the market. It's only like a second or two. But when we're watching real time. XRP pump, what up? Make sure to keep jamming in that liquidity. Guys, for this XRP pump, it looks like we just broke 54 cents. Make sure to smash that like button, retweet. Let's get some momentum here. Let's get some momentum here. Let's get some more people in the chat. If you're not subscribed, subscribe right now. Really appreciate everyone doing that. Mickle, give me your thoughts on the new Ripple crypto custody news today. Is there any new news there? I kind of looked at the announcement. It looked like it was just them advertising their product. Could be wrong there, though. Someone fill me in. Why did we go vertical? That's just what we do around here. The most random times we'll make a move. And guys, we don't know if this is going to be something that's really sustainable or just a random move. So don't get overly excited yet. We got a lot of work to do before this really gets exciting, but just the way XRP moves. Silver Days, good to see you. All of the holders already sold off. So real question, who's repurchasing? Well, that's a good question, Fire Dog. It's a great question. XRP the Moon, subscriber. Thank you for coming over, man. Appreciate that a lot. I am curious. I wish I could see how many people watching this stream right now are not subscribed, because I feel like it's a lot of people. And you should subscribe. I'm looking at you, whoever's not subscribed, to profit from it. Okay. For XRP to go up, banks and institutions need to work on something to make profits through yield or interest. What cryptocurrency should we look for that will... What cryptocurrency should we look out for that will interest banks? Yeah, that's definitely more clear. So obviously FLR is going to be one way to create yield with XRP. But here's the thing, Lou, like as I see this playing out, and it's a great question, I see most banks using XRP to move money from point A to point B. Other banks will loan other institutions XRP in order to facilitate that activity. So I think it's actually, I don't know if there needs to be another cryptocurrency in the equation. I totally see what you're saying, but you can create yield just with XRP on its own. It doesn't have to be like some other token being used to create the yield. Like XRP itself, because it's useful, you can create yield on the token itself. You have to lend it out. You have to do different underlying activities, but it doesn't necessarily mean that there's always another coin there. Now, if you were looking for another project aiding in that yield creation, I think FLR is an interesting choice because it's going to allow XRP to be used on other chains. I think Flare is an interesting choice because it allows XRP to be wrapped and used in DeFi. There are some other things there. Yeah, pump right now. To keep this pump going, we need you guys to smash that like button, retweet. Super, super helpful. Appreciate everyone doing that. And also, if you're not subscribed, what are you doing? The news shows Ripple working with banks. I thought banks were working with Ripple. Yeah, that's a great point, Roger. That's a great point. Yeah, they did specifically say that the Ripple custody solution was for banks. Smoke is awesome. Yeah, I love Smoke. What about the institutions that need to gain from us in one way or another? What do you mean gain from us, Lou? What do you mean gain from us? Need a little more work on the gain from us, and I think we can get there. Ah, that's awesome. Hey, Jason Bourne, take another poke at Mickle and see if we can drive the price higher. I love that. Mickle, what do you think will most drive price? Since the US is only 5%, I'm guessing the major driver would be other countries, Dubai, UAE. I think most of it's just going to be speculation in the short term and then long-term liquidity flowing in to really move money at a higher scale. I don't know where that's going to start. I would say Japan, Singapore, UAE, those will be the big ones until the United States comes online. And I think once you see the United States come online, things will get going a lot more. Why are we pumping? This right here to me is just random market activity. I don't think there's not always going to be a reason. There's not always going to be a reason. What Shirley say? There's not always going to be a reason. Has Jason Bourne subscribed? Oh, you guys are funny. You guys are funny. I like that you guys keep it going longer than me. Oh, yeah, you can unhide Jason. Absolutely, Rod. You can absolutely unhide him. Absolutely. I don't mind at all. I don't mind at all. As long as it's not like over the top. Absolutely. Daniel, it takes a lot to throw me off, man. We're going to need a little more than Ripple is an owner of Uphold. I shout out to Taylor for bringing that post to my attention. Ronald, that's Taylor, who's often in the chat. He's the one who dropped that to me. It was a great find. It is extremely interesting. I agree. So guys, I think I actually have the opposite effect of Alex Cobb. We actually normally get a pretty nice pump going here when I go live. So the opposite Cobb effect, we got to manifest that. Manifest it. Yeah, if I was the owner of Uphold, I would certainly not be live streaming. Taylor, good to see you, man. Taylor, everyone was loving that video you sent last night of Gary. I told Taylor this. I actually had another video like made and queued up. And at the last minute, I was like, you know what? Like, this thing is like everyone needs to see this. So I literally just did a quick intro, like watch this entire thing and then just let it rip. Is Cobb live? Did Cobb go live? Who let him do this? I'm like actually starting to think there's an algorithm in place. We're up to 2,000 people, guys. Make sure to smash the like button. If you're new here, you're not normally part of the streams. Your thought on Cobb's 45 minute. That's the problem. I just don't have time to watch a lot of other videos anymore. It's unfortunate. I try to catch up when I can. And that's why I rely on you guys so much. So I didn't get a chance to see Cobb's 45-minute deep dive. Maybe at some point I'll get the chance. Looks like we're still making momentum here. Trading views going down. Fiat leak is going up. Yeah, guys, Taylor's the best. Taylor provides all kinds of great stuff to me. Roger as well. Both of those guys on the back end provide me so much great stuff. And Roger, I feel like recently, dude, you've been like blowing it out of the water. Like blowing it out of the water with some of the stuff you're pulling up. I can tell you've really started to increase your knowledge of this entire ecosystem as a whole. And it's definitely been super, super helpful to me as you kind of throw stuff my way and gives me good stuff to look into. Yeah, no live. Maybe. I would say most likely no live tomorrow. Yeah, most likely no live tomorrow. I'm actually going to. I'm going to Maine, get a little golf in. Because every exchange has a different price for XRP. Because it's really just the consensus of what the price is being sold at each individual exchange. So there's no actual like set price for XRP. And actually, you saw a long time ago in 2017, you actually had South Korea XRP was at a much higher price than the rest of the world, and it's just because it was hard to get XRP out of South Korea. So think about it this way. If, say, you could only buy XRP from individuals and you wouldn't be able to buy from necessarily an exchange, every single individual you went to would all have a different price for XRP. And then the only way that would even out is over time. If you were getting XRP from one person from a cheaper price, and then you'd have to go to another person, then eventually those prices would even out because of arbitrage. So that's what happens at exchanges at the same kind of level. So XRP on Coinbase, if Coinbase is running out of XRP, might be trading a little higher than XRP on Binance or Uphold. So every exchange has a slightly different price. Now, there's people called arbitrageurs who will go around and buy XRP at a high price on Coinbase, or buy XRP at a low price on Coinbase and then sell it for a high price on Binance. And because of that, that kind of brings all these levels together. Oh, damn, that's a tough injury. Oh man, I used to play soccer. I played soccer in high school. I haven't played in a while. Actually, the last time I got on a soccer field, I was like disgusted with how bad I was. I was like, man, like I suck at this sport now. Yeah, I got TradingView kind of with a little bit of a pullback. Haven't yet seen it on Fiat Leak yet. Switch over to this view real quick. The Mickle view. Yeah. A little bit of a pullback here. All right, guys, with that said, I will wrap it here for now. It looks like some of our momentum is getting killed, so we'll see what happens later in the day. Guys, thank you so much for coming. Appreciate you all so much. I will see you later today.